All right, welcome back to Trader Sage. I just finished like a Q&A thing. I don't know what that was, but Q&A with a subscriber. But let's review price action for the previous week. This is gonna mark previous week. I currently only trade one setup, essentially, like one setup with setups inside, right? If I say I trade Purge and Revert model, which is a liquidity model, Purge and Revert. The 1 hour chart. This is delineating weekly, right? Put that back on. Delineates the week, right? So, I guess this gap down, like retested the previous week's low. Let's get right into it, right? Like, all right, so previous week's low. Just and what we have here, another low. And we are, all right, so this week opens up inside of this range, this low to this high, right? Because, right, it broke out of this range, this low to this high. This is one of the reasons why you could expect a retest of this level. So price is consolidating at the low of the previous week. So I think internal range, it was inside this range, internal range, broke outside, makes it external range, and then all of this is external range liquidity. So retesting this level makes sense. The pullback, optimal trade entry short is here. OT setup here, visible. Just turn that off, and then we can do right. Right. All right, so there you go. This is where your stop will go. This is optimal trade entry. That's this is the optimal trade entry. These are alternative entries, depending on your risk tolerance. So that would be like an entry here. Once this bullish fair value gap is violated, and just let's turn this magnet back on. All right. So, let's see. So that's just one trade. That's kind of like caught my eye. So this inverted bearish fair value gap on the 1 hour chart, and we had a run on stops, had a market structure shift here, had a retracement into the order block. One of the benefits of Purge and Revert model, I believe the ATM model, these are ICT concepts, right? Purge and Revert, ATM model, the optimal trade entry model. These models weren't contingent. It's not necessary for you to know what a fair value gap is or inverted fair value gap is, etc. Obviously, it helps a whole lot, but it's not in its essence necessary. So that's the previous week's low we had over there, and we discussed. So I'm not sure if we actually reached 2 standard deviations or not. I'm just being curious, trying to like 68, 1350, and this is 68 1450. Let's see. Valid 68 1350. So that's the low. That would be the high. 68 1450. Right. So we had it. Anyway. All right. So fell short, but essentially 2 standard deviations. So we spoke about internal range, external range, retest on the previous week's low, targeting 3 weeks ago, previous week's low, and exiting this range, external range. We broke this range, right? Because this was internal. This is external, but it's still internal to this range. Right? So price was inside of this range over here until it broke out. Let's get rid of this. Right? Until it broke out, retraced into this bearish fair value gap. Could have retested this inverted fair value gap. I didn't go down to a lower time frame because it's not necessary at this point. But we could. We might, right? Anyway, trying to make this as quick as possible. Not trying to make it as potent as possible, rather, right? Trying to do fewer things better. So, all right. So once we broke out of this range, we fell into this range, and we broke out of this range, and we landed into this range, this low to this high. So this is the dominant price range. Once we broke below it, right? So you can say all of this was internal to, once it was in this range, then oh my god, just like again, like those Russian dolls. I don't know how to pronounce it. So the dolls that's inside a doll. So you have market maker models inside of market maker models. Right? You have ranges inside of ranges inside of ranges. Not to sound like a moron, but you have ranges inside of ranges inside of ranges. So broke this, running this low, took external range, retraced back into internal range liquidity, this bearish fair value gap, all this inverted bullish fair value gap, drop down again. So we are now just based off of this, which is the midway point, equilibrium. This is discount, and the green area is premium. So we are now below equilibrium here. Steep discount, and so just to do this for like to see like an entry model. So this is the entry model. Now it's back above 50%. So now it's right around equilibrium, right? We are also inside of this gap down, this new week opening gap, which makes perfect sense, right? I'm gonna eyeball it. You guys can fine tune it, do what you got to do. I don't. So price opened up. Oh, matter of fact, that's gonna be wrong. Right. So price, that valid price opened here. Price close up here, right? Make that blue. Blue. All right. So anyway, that was like 2 entries off the 1 hour chart, but that's not my intention, right? So this is continuation of this week's order flow, right? All right, so boom, right? So we're going to talk about this week, which we kind of did just now, boom, right? But you want to go low, and these are in here, retraced, didn't get above here. So let's highlight that. Drag it, make that red, and then so we can go here. We got a 3 drives pattern technically. So we have this low, this low. All right, so Purge, right? Because here you have a run up, into internal range. You have a market structure shift too, right? There's a market structure shift here, and you could have been looking for price to hold above this. At that time, it was an inverted fair value gap when price was here. And you can see price, once it broke, it retested. You can say this mitigation block. You can say it retested this bearish fair value gap with that's why I have this on, right? Make it bigger. All right, so it's going in sixes. We can just do threes. All right, so we can say, so this is candle, what am I referring to? Candle 3, referring to candle 3 here. And I'm referring to, I think this is candle 13. I wonder if it gets like cluttered if you do this here. Yep, let's go back to it. Let's at least do 2 at least. All right. So this candle 14. Candle 13. Retrace back inside of this imbalance. Let's just take this. So back inside of here. So retest here, continue down, ran this low. There's no market structure shift to justify an upside move yet, right? And it traded into this bearish fair value gap. Like a lot of them there, right? Do this. And then it took out sell side again. All right, so we're going to just drop down. Well, can I do that yet? So purge. So we're looking to see that, hey, it ran this previously slow. Purge. This is valid. It purged below here again. Ran up. Purged again. So 3 drives pattern. Reversal climax pattern. And look like the chart has chicken pox, right? Like, get out of here. I'm about to turn. It's doing too much. All right, so this is this week, January 19th. And we are looking for purges in reverts. We can actually go to, let's see, do the 15-minute. That's it's less price action. All right, so we dropped below that previous week's low, like 3 weeks ago. Purge, boom. And then we have, on this time frame, we have a market structure shift, and we have a revert. And what are we targeting? The day of the purge, you got these relative equal highs. We have these relative equal highs as well. Then we have this bearish, we have these fair value gaps here. I'm going to take all this off. You can see price reacting to those though, but whatever. We're going to pay attention to price purging below a previous higher time frame level. So purge, market structure shift, and the revert or pullback. Got a tiny bearish fair value gap here on the 4 o'clock candle. That's acceptable for an optimal trade entry. And if I put all the words there, there's the words. And you'll see target 1. First scaling, target 1. Just off the model alone. So this would be your entry, 61.8. That's what we're going to focus on. Like to make sure, hey, I'm going to make sure I get into the position, 61.8. I'm not going to talk about any of the other discount levels. So this high, this low, optimal trade entry long, targeting these relative equal highs, running into this imbalance, running into this higher time frame, 1 hour inverted fair value gap. or you could use the one that we deleted. Either way, justifiable. Short. Again, the 1 hour didn't have a market structure shift to justify price continuing higher, so we are still bearish. And in that case, the more dominant move down is this 1, 2, 3 candles. Everything else kind of slow bled, so slow bleed out. And here we go. Another optimal trade entry short. 61.8. Short into target 1. And it ran that low. Intraday low. London low. And it didn't really do much. So Purge below. You have a break in structure, 1, 2, 3, and a retracement into an order block. If you wanted to take that trade into this, as you think about premium discount equilibrium, so this is now went from discount to premium here into this imbalance. Clear, right? Clear as day. Right. So that's how many setups is that? That's 1, 2, right? That's a legitimate setup. There's no fair value gaps or volume imbalances, etc. here. So so we have price consolidating here, then drop below, retest, short. Another optimal trade entry short. Sounds like I'm just making up stuff. 61.8 short to market 2. 1 standard deviation. Almost 1 standard deviation. Anyway, so we have that. We have price running here, price running here, price running here. Then we have price sweeping below these lows here. This is suspicious, right? Yeah, it's suspicious because how do you catch that? Right, so you have this momentum run, consolidating here. You got price running these lows here. Hard to tell. I wanted to go to a 5-minute, but this is my safe time frame. 15-minute, man, I'd be cooking on this time frame, but we got this, right? Let's make that really thin. We have this run below here, and technically you have they have price. This ran the low, closed below. This closed below as well. This ran that low, so technically a trade above price going above this high. This high, really? Well, this high, whatever high you want to choose, but I would say this high here, the one that ran the stops. So this would have got you into the trade, then retest of that low, and then this is your momentum trade. Trade it right back into this imbalance, this bearish, this inverted 1 hour fair value gap. But all of this is a market structure shift, right? Purge, ran the highs, revert. So this is the purge and revert setup. And to me, everything kind of goes hand in hand. So again, we're doing a 61.8 as an entry. And target 1, target 2. Yeah, so and this happened on a Wednesday. Right, so there's a several entry models. Same, it's the same. I don't know. I think I just used a 1 hour chart, right? In weekly references. But if you were to like get more like specific, day by day, right? To this, the previous day's low, dropped. Same principles here. Ran the previous day's low, drop. All trailing entry short. We already discussed that. And then this is a new day. So that's your trade there. Consolidation. Price ran these lows here. Market structure shift. All of that. You'll let all that rock out. Because this retracement, if you wanted to drop down, and your optimal trade entry into this imbalance and discount. I think we just discussed that. Right, so and we have this imbalance here. And that's your long entry for this day, right? So for me, my market maker buy and sell model, my Purge and Revert model, it technically, I think sometimes it took me some time like learning some of the stuff. You just kind of miss it. It's actually, you have like a momentum run, like phase A would be like a momentum run, and then phase B would be that retracement, that mean reversion setup. So technically each, like you'll let the momentum run. That's this price leg. You'll let that run if you didn't feel safe, right? You didn't feel safe, but it's still, you got a violated bearish fair value gap here. You got a violated bearish fair value gap here, supporting price higher. Ran the high, boom. So that's what I'm saying. Like you can justify this momentum run higher. Then you have a run on stops here, and you may not be able to see the setup here with the one that I'm describing, but if you went to a lower time frame, you'll see it clearer. There you go. Like really beautiful, actually. So you're right. Ran those highs. These highs here. You see, I ran into this inverted 1 hour fair value gap, which higher time frame drawn liquidity. And any like this is a real time hours swing high for the day. That's what I have it on. Show you. I show you. It's mad small. All right, real time hours high. The Asia high. We can get really like, these are the levels that's significant to me, but this is this day's real time hours low. All right, so I took off that 1 hour fair value gap, but that's important still. But you can even take it as, oh, ran these stops, purged above these highs, and then you drop to, and we were on a 15-minute, so we dropped down to the 5-minute, and then we have this setup here. And honestly, you probably miss it, but tiny little fair value gap here, and you have a tiny one here. So you technically have like a balanced price range here. Not grandiose. If you went to the 1 minute, which I'm actually actively not trading off the 1 minute, because it's an increased profitability on these, for me, on the higher time frame charts. Like you see the setups here, it has a for me, it has a potential to run higher. All right, so here I highlighted the fair value gap and I highlighted the volume imbalance. And that's your short entry here. You miss this one, you got this one here, and then short. You can do quadrants of the wick or this wick, whatever, drop. So that would be your entry. Actually, I'm gonna just go to the 1 minute just to show you that it's even better over there, more clearer. Now it's very clear, right? But you can see everything on. All right, so that's a bullish fair value gap that's been violated. Now you have multiple entries. Remember, this high took out a high back here. So you got to run on stops. You have a market structure shift, especially with this gap, market structure shift below, and a retracement. That is the model. And optimal trade entry short 61.8. That's what we're focusing on. 61.8, and we had it run. And let's see, 2.5. And that's the 5. So definitely shorten from here. Another opportunity to short here, and 5 standard deviations of this range, this high to this low, repeated. How many? This doesn't matter, right? This took the trade and you followed. Like, there's no market structure shift. There's no market structure shift. There's no violation of a, like, this is a signature, right? Bearish fair value gap, and it dropped. Bearish fair value gap, traded back in, drop. Bearish fair value gap, traded back in, drop. Bearish fair value gap here, traded back in, drop. Bearish fair value gap, violated, right? Ran stops into a higher time frame PD array, aka in this case fair value gaps. Fair value gap, 1 hour fair value gap here, right? Violated. Get out. It's been violated. Violated. Boom, boom, boom. It's retesting this level. Boom, 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 boom. Right? Market structure shift again. Retrace back into the balance price range. This bearish fair value gap and this bullish fair value gap. Right? And then price retrace here. That's another entry model. I didn't want to discuss the 1 minute here, but you can go back to the 5 minutes shortly. But all right, that's 78.6, but we only talking about 61.8. So got in here, and this would be let's say you got in here, for example, that's 1 o'clock, 61.8, and now you're targeting here. And yeah, that's good money. Like, I don't know what to say. Let's go back to the 5 minute to see what does that look like. Right? Because now you're inside. Right? Because you're inside this range. This low, really this low to this high. I think we discussed that. I feel like I'm like, it's like really exciting though, because it becomes, to me, it becomes clearer and clearer, right? So optimal trade entry long 61.8, and in this case you could have held or just get out once price ran the intraday high. They ran the intraday high, ran the previous day's high, of course, and this is what makes this trade valid, because it ran a higher time frame key level, previous daily high. If you're using ICTs midnight to midnight, then technically it didn't run the high yet, and that's what this did. But original consolidation is all here and trading into this liquidity void, aka the new week opening gap, and that's where it stayed at for the remainder of the week. And it didn't give you setups, robust setups, but if you have a model like optimal trade entry, boom, boom, that's a legit trade targeting the high. Same thing, failure, imbalance, here, boom. Anyway, I think that's enough. Hopefully that's enough. Hopefully I'm not just talking type stuff. And I kind of like leaving this up here as well because it kind of tells me what to expect in terms of potential range. So price, especially in the Asia session where it's like looking like, you know, paint is drying. It's like, all right, the price actually reaches ATR. If price reaches ATR, then I may want to not look at it anymore, or expect some type of mean reversion or a reversal pattern. But that's all I got. I gotta go shovel snow, I think. Yep, still coming down. Well, nice talking to you. Hopefully everybody's in good health and thriving. Remember to do fewer things better.